Hello, welcome to Trivest Invest Wisely. My name is Martin Pelletier. I'm a family chief investment officer here at Trivest Wealth Counsel. Today I'm going to review forecasting and what does it mean for investors and what do you read in the newspaper and what to expect. And so one of the key things that people always look for and what they're reading for is some sort of prediction about the future. However, in reality, it's almost impossible, if not guaranteed to be impossible, to predict near-term moves without having some luck assigned to it. The reason for this is that there's too many variables in order that can transpire in order to process and utilize in order to predict the future. And there's a couple of reasons for human behavior reasons why analysts and economists more than often get it wrong. So first of all, looking at the analyst side, there's a conflict of interest. So on the sell side or an investment banking side of things, a lot of the firms will underwrite the companies that they're providing coverage on. So as a result, they're intrinsically motivated to provide positive recommendations, because if they provide negative recommendations, they may not be able to get investment banking business. However, that said, there is a Chinese wall. There are rules in place to prevent that conflict from happening, but it still exists, no doubt, here in Canada and abroad in the US and in Europe. Although there are steps being taken to separate research from investment banking and sales, and that's paid for research by institutions directly, and that's happening in Europe. Looking on the economist side, when they're making near-term predictions, such as interest rate moves, they have nothing at stake. They have zero skin in the game, so it costs them nothing if they're wrong. They could just revise their forecasts. So as a result, you have herding towards a consensus view. So when interest rates were falling, everybody said they were going to continue to fall, and as a result, you had stocks or interest-sensitive stocks that got penalized, like rate reset preferreds. They got sold off 30%. If you did the opposite of what the economists were telling you, you would have made 29% on the recovery, as they were expecting rates to continue to drop while the Bank of Canada kept the rates steady. In today's environment, you have everybody calling for multiple rate hikes. As a result, you've had some of those interest rate dividend-paying companies in Canada sell off materially, up to 30%. So now you've got some dividend yields of 5 to 6%. So investors who've been complaining about not having high enough income off their portfolio, off their investments, well, look at it today. You've got 5 or 6% dividend yields on some very blue-chip, high-quality names. Maybe the Bank of Canada doesn't continue to raise interest rates and they keep rates flat. If that happens, what happens to those companies? And so, taking a different approach, not listening to giving as much credence towards a near-term forecast by economists and analysts is probably a prudent course of action. When looking at investment advisors or a person who's managing your money, also a warning sign is if they're providing near-term forecasts. This sector is going to go up, or this stock is going to go up near-term because of this and this. In reality, there's too many factors to have that kind of certainty assigned to those kinds of rationales. However, what a good portfolio manager will do, or an asset manager or an advisor will do, is to make sure that your portfolio is very well diversified to handle bumps in the market or areas that come out of nowhere that can impact your portfolio, and also deploying some form of risk management so they can protect some of the downside. That's the true value of a good manager. So ignore the noise. It's very exciting to read, and take a more different approach to analyzing what's going to happen by being well diversified and deploying some form of risk management into your portfolio. Thank you very much. Have yourself a great day.